Financial Argument. Follow us on YouTube.
They have flooded the world. I mean, you have margin levels, which is borrowing to buy stock at the highest level. You have central bank balance sheets at the highest level, personal debt at the highest level, corporate debt, city debt, state debt, and federal debt, government debt. So it's all about credit. And that means, you know, so when the interest rates are at zero, and if you think about this for yourself, it's easier to service the debt and the credit that you accumulate. Your payments can stay pretty much the same. But when the interest rates start rising, which is the environment that we're in now, well, then you start to get in a more precarious position. And we've seen a lot of that happening since the end of January, or, you know, the beginning of the year. It went straight up, I think, until January 26th. When this most current phase in the markets began, and they started to break down. So even though it still appears like it's still floating, no, the markets are breaking down, definitely.
Well, so by lowering the interest rate, it's essentially putting more cash into the economy because people are able to borrow a lot more for the same amount of monthly payments, if you will.
Exactly.
Because consumers were strapped before they, you know, they're always strapped. And
I'm going to say, I think they still are.
Yeah, now we're just strapped even with more money that we owe, but it's at a lower interest rate. So they've kind of run out of their tools in their toolbox. Okay, so what's going on with them flooding the market with so much more money? We didn't really see the inflation that we were predicting. Why?
Well, it depends on where you look. Where we have seen the inflation, I mean, when they did all the quantitative easing, which in this country, maybe we're not doing it so much because they're trying to run off the balance sheet. You hear hesitancy because they're doing it in the treasuries, but they're not doing it in the mortgage-backed securities. So I'm sorry, I kind of went on a tangent. I mean, these things are so complicated that when you try and give like one little easy answer, which is what I try and do, it's not necessarily so easy. But essentially, you know, in 2008, the system really did die. And so it's just been constant. They're very creative and they come up with all of these new tools. But these debt levels, it's not just that they're not sustainable, which is the way they position it, but they are not payable. And you're absolutely right. They have used up every single tool in the arsenal. Now, that's not to say that they can't come up with another amazing, you know, tool, maybe universal income, to cover up the fact that, you know, people are not really making more money, even if the inflation or their salaries make it look like they're making a little bit more money. They never keep pace with the true rate of inflation. So where we've seen this inflation really explode is in the stock market, in the bond market, in the real estate market. Those markets, and in the derivative market, that's the scariest place, frankly, because those are just big bets. But that's where all of that quantitative hyperinflationary money printing went, was to reflate. That's the reflation trade that they talked about for years. They had to reinflate the stock market, reinflate the bond market, reinflate the real estate market. That's where it went.
Well, it's kind of interesting because it's really obvious that the market, I mean, it doesn't double this quickly, right? It's really gone up. And when it went down in 2008, everybody said that was a normal adjustment in a lot of ways. Maybe not quite that low, but to a certain point, it really needed to adjust because it had such a roaring time. It
needed to adjust More because of the garbage that that the market had moved up on, the speculative derivatives, which really started in the end of the 90s, right? I mean, a lot of things shift. You have to kind of look at the whole evolution. And you're right, it was a normal correction, because if you're actually in a free market, then it's a supply and demand market, and corporations would be doing things that would actually stimulate their economy and, as a whole, buying property, building factories, hiring workers. I mean, if it really was an economic recovery, that's not really what happened. That was pulling money out of your house like it was a piggy bank, because that was the next bubble that they blew up after the NASDAQ bubble popped.
Yeah, it was a game that they played. Yeah, it was a game that they played.
Oh, 100%. And it's a dangerous game. And it's like, I was thinking about it, it's really like a whack-a-mole game. Italy, the populist movement in Italy rears its ugly head. We know the Italian banks are in deep trouble. The markets react to it, down 400 points at the Dow the day before yesterday. Bam, they put that down. Okay, now they're not going to be these recall elections. Everything is just fine. Well, the Italian banks were in trouble before Wednesday, and they're still in trouble. Yeah. They've been in trouble for a very long time. And now we've got the tariffs that they're imposing for national security reasons on our biggest allies, the EU, Canada, and Mexico, right in the middle of the NAFTA talks that, are not going so well. They were supposed to be concluded by now, and they're not.
So what do you think of the tariffs?
Well, look, personally, all of these trade agreements that were put in place, if you actually read them, were more about supporting the corporations and removing government sovereignty. So I think they really were a bad deal. I don't know that I would necessarily, approach it in this way or not approach it in that way. I don't really have an opinion on that. But yes, I think that giving corporations greater authority over sovereign nations, and we have, some corporations that earn more than the GDP of many nations these days, which is ridiculous. But it feels more like fascism to me, where the corporations are really driving this bus. So I think that needs to be taken into account as well, which I don't know whether or not that will be.
Well, it's interesting. I agree with you, by the way, that it feels more like that. It's interesting. Before 2008, I remember looking at the stock market and what industries, or in one industry that was doing well, and that was the finance companies, the money companies. No other industry was really doing great on the stock market and in general, really healthy at that time. In the beginning of the 2000s, before the big crash, besides from what I could tell, they might have been healthy to a certain degree, but they weren't soaring. The whole finance industry was what took that whole market high. What do you think?
And what took the finance companies high? Derivatives. Because it used to be in banking, people deposited their money, the banks paid interest on that, and then they loaned that money out at a higher rate. Okay, you think back to It's a Wonderful Life. Okay, so that's that was the banking model, and they didn't take on these risky bets with depositor money. In 95, in this country, they legalized the ability for banks to sweep those deposits into sub-accounts, and then the banks have the ability from there forward to utilize your deposits as collateral to borrow, so leverage upon leverage to borrow, and then they can do anything they want with that money. And what they've done with that money is put it into risky derivative bets, where, there in many cases can be leveraged 1,000 to 1.
Well, think of the money they made on that. That was a huge boom. And so they're they haven't been able to repeat that. And so now they're constantly trying to figure out different ways to game the market to create that kind of huge wealth.
I don't know that I would completely agree with that, because the derivative market has grown, and it has, whereas it was a niche market up until 2008, where it was really primarily just the banks that were participating in it. During a little bit, like I looked at the Bank for International Settlements, they publish all of the derivatives. And before they changed the way they accounted for it, it's pretty noticeable that central banks were not really big players in the derivative markets. Maybe a little bit to hedge a foreign exchange exposure, but at a very minimum level. When the crisis hit, what they did was they took taxpayer money and took those bad debts off the bank's books. Those bets did not go away. They merely shifted from the bank's responsibility and liability to the taxpayer liability and responsibility. And what the central banks then learned, because who's been driving this bus? The central banks. And there was a whole CFTC report. Megan, would you write that down? And I'll send you this link so you can read that CFTC report on central banks now doing speculative derivatives. So exactly. And in mutual funds. So now they've pushed them onto exchanges, and they have completely infiltrated the entire global financial system. Even for you and me, we may not realize that we are participating in this derivative market, but we certainly are, whether we want to or not. And if you own a mutual fund, you better darn well find out if they've got derivatives attached to them, anything that's leveraged. And so, I mean, the banks are making a flippin' fortune. The Office of the Comptroller of the Currency actually publishes a report on a quarterly basis of the level of derivatives in the FDIC insured banking system. And, so they show you how much money, at least that they're reporting that they're making from the derivatives. No, that's a huge line item. We're not so important anymore.
Well, it seems like they're the only ones really making money to that level. There's some high tech and there's some good, futuristic stuff that's making some decent money. Healthcare in a lot of sectors. But in general, they're the ones making the money.
Well, yeah. I mean, it should be pretty obvious to everybody who exactly was too big to fail, because you and me, we could fail just fine. And a lot of other sectors, mom and pop shops, they could fail just fine. But the banks could not fail. And they've gotten a whole lot bigger.
Okay, well, why hasn't inflation hit Main Street? And will it ever?
Well, number one, it actually has. It's just that their perception management tool where they're telling you they're not hitting their inflation mark. But I don't know. Can you remember what you paid for, your food or your gasoline or anything like that in 2006?
Well, obviously it's inflated. It hasn't hyperinflated. It's definitely inflated, and I don't like that. But like during World War II, they purposely hyperinflated to get out from under their debts. It's the only way they could have saved themselves. So they purposely hyperinflated. Everybody lost everything. It was terrible. But that's how they got under their debt, so they could rebuild. Do you see them doing that here on purpose?
Oh, 100%. Yes, that's the plan. That's been the plan from day one, because we've seen it there have been well over 4,800 hyperinflationary events from fiat money, government money. Every single one, there are no exceptions to this rule. And frankly, Sarah, the only difference between inflation and hyperinflation is the speed of the inflation. And that's really been the genius in this system, because before the Federal Reserve took over, central banks did not attempt to control inflation. So you would get that hyperinflationary event when they would go into war, to use that excuse, etc. But it would happen over a short period of time, on average about 8 years. Well, the Federal Reserve, I mean, it's really genius. Their whole piece, a big tool, was in controlling the rate and speed of inflation. So if they want to heat that up, they want more inflation, they would drop interest rates down, more people would borrow and spend, and then that would push inflation up faster. When it overheated, when people noticed, they would raise interest rates all the way up, fewer people would borrow and spend, and that would slow the inflation down. It didn't stop it. It's just like their inflation target is 2%. That means that they want the dollar to lose 2% of its value annually, because then you won't notice it.
Yeah. Well, now they hid it behind this mass derivatives market.
Yeah, it's and the stock market and the bond market and the real estate market. There's a true value in my work, and this is all part of the strategy that we do here at ITM. But in my work, I always feel like it's critically important that people understand 3 key things, because then nobody can pull the wool over your eyes. Number 1, and this is arguably the most important factor, you need to understand the true value of any asset or any instrument. Because if you don't really know what it's really, really worth, then you're listening to Wall Street tell you what this is worth. And I don't know, with all the lawsuits and all the manipulations and with all the, all the garbage that they put out, they're admitted liars.
Well, you can't trust them. You can't trust anything they're doing. The only thing you can do is bet on riding their game and get out before they decide to stop playing their game.
Well, that's why I do the insider trading every week, because, and you'll see there was a huge spike in insider trading again for this past week. So yes, you're absolutely right. They push the markets up. They get people's buy-in. Oh, it's going up. It's going up. I have to ride it because it's going up, while they're selling in to you. And then when they have enough out, then they want it to crash. Your wealth transfers their way. And because they've moved their wealth out and put it into tangibles. I mean, let's see, who's buying gold? Central banks and the 1%. Okay, so they move their wealth into something that will hold its purchasing power, let the markets crash. Think of 2008, and then they go up and they pick it up for nothing.
Yep, that's exactly the cycle. It's the cycle every time.
And that is a wealth transfer tool. So understanding the true value of a fiat currency, right? And Megan, write this down. And if you look at this purchasing power chart, you'll notice that we're now below 4 cents in purchasing power on the dollar, okay? According to the Federal Reserve. You'll see that graph. Take a look at it. But if what they build up from that, so the true fundamental value of the dollar is 0. Every single one has always gone to 0. Okay, so you look at the stock market going up and the bond market going up, that is really hiding the decline in value of all of the currencies. This is the real trend. They're showing you this so that that's where you hold your wealth, so that when it crashes, you're done.
Well, that's inflation. Inflation itself is the devaluing of the currency, whatever percentage it is.
And that's by design, Sarah. It says it in their documents. You're right. That is the single most important function of fiat money, of government money, of the dollar.
What do they say?
It's not the name. Those things are names.
Because I know they have a target of like 2.5% inflation or whatever their target is. What do they say is the point of that inflation? Why?
Well,
why do they have a target?
Now, well, it's because debt is easier to service when dollars in this country have less value.
That's exactly
So
right.
stop-
That's like Germany. When Germany did it on hyperinflation, they did it to get rid of underneath all their debt. If you do it slowly, it becomes easier and easier, but yet you're making less and less money over time. And if it costs more to buy stuff, you're not coming out ahead. Although it would be nice if you can get underneath the debt by paying less overall.
Well, and that's part of the strategy too, because that is the whole strategy of governments and central banks is for this debt to be repaid with currencies that have zero value. That's what hyperinflation really is.
Well, how long can we last? How long can they? I mean, at this point, we're saying it depends on how, because they came up with this. Oh, the central bank started using derivatives, and they really got a huge influx of money into the market. But at what point? In war? I mean, at what point?
Well, we will see war. Sarah, quite honestly, the market behavior that I've been witnessing since the end of January, I think January 26th, tells me that they are losing control. So it's already breaking down. It definitely is, because, you had a one-way up market, and it's done on a tsunami of debt in every single area of the economy. Well, the answer to that question is, how long can they sustain a debt that is, this level of debt? Because that's the way they covered it up the last time. Can they double or triple or quadruple what they've already done?
It's just crazy. So. It is absolutely crazy. And now cryptocurrencies and a dollar reset comes into this. Okay.
Yes.
How do you see that whole game being played out?
Well, it is actually because that's what they want to reset us into and take us into a purely digital system. In that way, according to their documents, they will have the ability to do lifetime taxation and make comparisons between what you earn and what you spend. And if you are not spending enough, I mean, this is what they're talking about. This is from their documents. If you are not spending enough, now they've got the tool of negative rates because there's no place for you to go. I mean, right now, if they did negative rates, and where they did do negative rates, people like in Europe and Japan, etc., and Switzerland, people have been stockpiling cash outside of the system to preserve their principal. Well, that's why they want to get rid of the cash, because then that eliminates it. They have the ability to track absolutely everything you do. And for governments, it's about taxation. For central banks, it's about getting you to spend. And they actually say that.
I know.
Because right now, they say, yeah, I mean.
Well, they want the tax money. They want the tax money. They want you to spend. They want the debt.
Right.
The combo platter.
And we're now entering, and I've been thinking about this, so I definitely have not finished chewing this piece up, because you want to think about the fact that 70% of the economy is consumer spending. But since the incomes never keep pace with it, they can make the GDP. I mean, look at the Venezuelan GDP. It looks awesome, right? But would you want to be living in Venezuela right now? Even looking at the Venezuelan salaries, they look awesome, but they're not keeping pace with the hyperinflation. 90% of the population is in abject poverty, even if you have a middle class job. So what they've been pushing us into in this fourth industrial revolution, which we are in already, is a sharing economy. So it seems as if they are preparing for the masses and the public to basically not have much income. And I haven't really figured out yet, honestly, exactly what that's going to look like. But, you're going to share everything. I'm pretty sure Ivanka Trump is not going to be in that sharing thing. She's going to own what's being shared, I'm sure. So you'll have those that own what's having to be shared and the rest of us that will be sharing.
Well, that's like communism on hyperdrive, and it's also, total planned society. But there are some concerns where jobs are going to be replaced with automation, and they don't know what to do. But
Absolutely.
let me ask you. We've gotten to a situation where bankers and money managers, not necessarily bankers, but financial strategists, are the ones making civilization and society decisions, which
Yes.
isn't really the place we want to be, right? I mean, it's something is backwards here, and we
No,
got.
you want to see what that looks like? Look at Greece with how many times they've had to do austerity, or any country that has really fallen prey to the IMF. It is not a pretty picture. The public is suffering.
But do you think the public is aware and smart enough? I know there's a lot of smart people out there, but the average person, do we need the average person to get it in order to say,
Oh, yeah.
Well, then are we?
Yes, we need the average person to get this, Sarah. Absolutely.
Is that possible?
That's what my work is about.
Okay.
Because if the average person does not get this, then that's where they're taking us. Look at China, full surveillance. You got one person at the top, but it'll be the IMF that does all that. It won't be fun. You won't have those opportunities,
I do know, yes.
that we had growing up. So, but if the average person gets this, then they can say no. And if enough average people get this, and the way you say no is you become your own central banker and you own physical gold and silver. But if enough people get this, then they won't be able to get away with it, at least at this juncture. They might need another generation or two, or my generation.
And I think the way a person can relate to it is, it's like if you've ever worked for the worst bureaucracy in the world, where everything is almost at a complete standstill and they control you to the nth degree, that's what we're going to enter into. And what will be at a standstill will be creativity. They'll force, like with the medical system, they're forcing solutions on you that don't work, and all the advances. We can't, Donald Trump, bless his heart, he said did an executive order that you have the right to try. And I'm hoping that makes a difference. But we have essentially stopped evolution, stopped creativity, stopped innovating in a lot of fields because they won't let us. That would be on hyperdrive.
Yeah, I would definitely agree with that. And, messing with our food supply is definitely one way to keep people sick, keep their mental abilities dull, so that they can, so that they pretty much sleep, through this. But I'm hoping that we can wake them up.
We have to.
We have to. That's what your work is about. That's what my work is about. That's what this building of the community is about, a global community, not just one. I mean, there's all different levels of that. But yeah, I mean, we the public really have to come together, understand what's happening, and make a stance that no, that's not okay. And we vote with our purses.
Now, I agree with that. Now, how many people who are helping to put this system together just don't understand what it is that they're putting together? Because, there are some theories that the whole cryptocurrency market was created by libertarians because it was a way to dupe them into creating the whole system for them, of which they're just going to use. I mean, how many people are just patsies in this process?
Most of them. I mean, I really do believe that overall, everybody wants to do the right thing. They don't want to really, they're not intentionally hurting people. Even Lloyd Blankfein, head of Goldman Sachs, said we are doing God's work. So I think he's very misguided, mind you. But, I don't necessarily think that most people have ill intent. I think they just don't care, or they don't know. I mean, I was a stockbroker, honestly, and I was at Shearson, which at that point they had the best training program on the street. and there were not very many women in it when I was in it. But, you know, they don't, and they had, you know, they put a lot of money into training me over a long period of time. And they didn't really want you to understand how the markets worked or what globalization really meant. They just wanted you to sell a product. And so, you know, even the insurance agents, the financial consultants, the CFPs, which are really licensed in insurance products, I really don't think that any of them, I mean, a question that you really need to ask somebody is, have you read the prospectus? Have you personally read the contract? I don't want you to just explain it to me. I want you to show me what my rights are and what my jeopardy is. I want you to show me what my costs are, the real costs. Not, this isn't going to cost you anything. All the money that you deposit is going in, but then they get paid out a huge commission because it's just hidden. And you have to pay huge fees if you want to get out of it. So while I don't think that they have ill intent, I don't think they're really doing the right job.